Hey, what's up YouTube? Eric here from MajorLeagueTrading.com, and in this video, I'm going to show you guys start to finish on a trade in Tesla that I put on for a swing starting on Tuesday when I was looking for the trade, working all the way up until Friday yesterday, and I managed it here from the laptop. So put it on at the house, but went away for the weekend, a little loft Airbnb situation. So let's dive in, take a look at the charts, why it is that I took that trade, and then also stick around to the end. I have a quote that I want to share with you guys that I think will make a big difference in your patience when it comes to trades. All right, so we're back at the house now and gonna record this video. And I don't want to make this just like any other YouTube video talking about a trade going, hey, you know, I got in here and I sold it here and this is how much money I made, blah, blah, blah. I actually want to break down a couple different things with this one. Leading back, like I said, from Tuesday when I started to watch this trade, develop the trade, plan the trade, and all of the things. And then I ultimately didn't end up taking the position until Thursday, and then managing it into Friday, and I still have it on right now being Sunday, carrying some over through the weekend. So the big thing with this one, right, is, all right, we've got Tesla here, and what I want to do is, first things first, I want to pull over the plan. So I want to start it off with this. And this is something that I do, and you can see like the dates. I mean, this is all the way back to, you know, November of 22. These are December 2021s. And we can go all the way back, you know, through 2020, through 2019, all of these things. And this is my daily plan that I write out every single day. And this tells me what I can and, more importantly, what I can't do on the day. So kicking it off here with the first one right there. This is going to be from March 28th. This was on Tuesday here. The big thing in which I was talking about with this one was, well, number one, we had BABA on the day, which I missed this trade. I was not at the desk long enough for this trade to develop. But Tesla here was talking about a move over 194.98 today. And I think we can step back into a swing trade in there for the 200 break, but I would like to have the market in our favor on this. So if we take a look at Tuesday here, you can see market ends up opening here and we just sell off immediately, right? So we don't get back up over, we don't do anything with this 194.98. We actually trade down into the 185.70 support level here. It ends up setting, you know, this nice little kind of bottom on the daily chart for us, gets a little bit of a decent rally into the end of the day. And at the same time, we can look at SPY, doesn't really make a difference here. At the same time, if we look at SPY, you know, okay, SPY here moving lower, rallies back, same thing on the day, right? Now, the key in this one is I would like to have the market in our favor on this one. So the trade is there, Tesla, we're waiting for 194.98. This is on Tuesday. It doesn't trade it, and we don't have the market in our favor just yet. Fast forward to Wednesday here, and this is the great thing about a plan is like I can go back years and go and look at the chart and be like, oh yeah, this is what I was intending to do, this is what I did. And it gives me a really good reference for journaling my trades and analyzing what it is I'm doing, where are my losses coming from. Are they coming from something that wasn't in my plan, which we can talk about here because two of the losses that I had on the week came from, you know, things that weren't on my plan. So taking a look at this here, so with Tesla, 194.98, still the line in the sand. Above there, swing longs are on the table. Would be better if it happens prior to the market trading up into targets for the obvious reasons, meaning that, hey, we want the market in our favor. If we can get that entry and then the market can trade up into targets, it's, you know, theory would be that it carries Tesla with it from there and, you know, help us ride it up through the 200 level, get a nice little cushion for that potential swing trade, right? So that's on Tuesday, or Wednesday, sorry. So taking a look at Wednesday here, this is just a 2-minute chart, 194.98, you can see we rally right up into that level. We trade a high of 195.29s on Wednesday, right? And then we reject off really, really nicely here, straight from that level, and pull back basically right into the gap fill here, about a 6-point range overall on the day for Wednesday. But again, we're still not able to get up over 194.98. We're not able to get confirmations. We're not able to get any sort of entry into that position. So we just continue to sit idle on our hands and wait for this trade to develop. Now, I'll talk about one of the losses that I took this week, which was about $1,000 in Lulu here. So I said a massive gap in here, but if we manage to hold 370 quarters and work into an uptrend on the day, then longs are on the table. And here, at least up until S&P trades their 67 quarter, which was that same target level I was talking about for Tesla. So if we take a look at Lulu here, again, this was all sent out in pre-market, 370 quarter being that line in the sand like we just talked about right here. It needs to hold 370 quarters, which in the morning it was actually pre-market, it was trading above there. And then once it got below there, it acted as resistance, traded to the tick. And what I ultimately ended up doing here was when we got back through the opening print right here on the day, right about 367s or so, I stepped into a long position just using some spreads for a move back up towards 377s and change in Lulu with the anticipation, hey, we would get up through 370 quarters. Again, this ultimately turned into about $1,000 loss because I didn't wait for us to get up through 370 quarters. Now, taking a look at Tesla again, this one I did in fact continue to wait. I had this 194.98 level marked out. I had all of the things in which I wanted to see for that. And then come Thursday, we finally make the move and we go, okay, Tesla 194.98, still the level in here. If we can open above and hold, then I like longs up into 200.05s and then more from there on a swing. Now, in the options mentorship chat in the Discord, I ended up dropping in a little bit more detail on this one and why I thought that all of these levels here were going to break going into Friday, as Friday's action was kind of unfolding here, which would be this move that it ended up getting, nice. What is the range on this? $10.59. So nice, $10 pop, $12.18 with the gap on the day, right? So notice Thursday, what was written here? 194.98, still the level. If we can open above and hold, then I like longs up into 200.05s. Okay, open above. Here's the opening print on the day. Looks like it was 195.58. So we got about a 60-cent move over the level for opening prints on the day. We pull back, we hold, we rally up, we pull back one more time, we hold, we rally again, we pull back, and after this point is when I started to accumulate a position. So the question is, why did I actually did it right here? Right there. So the question is, why did I go ahead and pick this position up here? What was my risk? What were all the things in which I was looking like? At one point in time, yes, I was underwater. I got in here. It traded back to here. But notice, it never broke this 194.98 level again. Came down, traded 194.96s. That's not considered a break. That's a test. Rallies right back up here. And then continues to go sideways through the day. So here's the position in which I picked up, and I went ahead and left the, or I went ahead and added these in here so you guys can see the timestamps of when I entered my position. Picked up 10 contracts here on these 195 calls. This was going out to the next week, so I was buying these on Thursday, and they would expire the following Friday. So basically had, 6 trading days plus this day worth of time in that position. Now, pick these positions up here right at 11 o'clock like I showed you on the chart. And what I was looking at with this from a risk standpoint is like I was going, okay, the lows down here, if it breaks 194.98, we're likely going to trade somewhere down here into, the 7 1/4 area on these contracts. And that'll be my stop loss, right? I was using a 15-minute chart in order to take this position right in here. If you look in the, well, actually you won't be able to see it because that's where my face is. So if we look at the 15-minute chart, right here, at the start of the 11 o'clock bar is when I took this position. Now again, this is multi-time frame analysis combined with the levels, combined with being patient, waiting for the trade, looking into the swing, all of the things in which I wanted, and this is where I chose my entry. Now again, ultimately, yes, it does come a little bit red, not that big of a deal. I'm looking at the lows of this being the stop loss, and again, I've been waiting for this trade now for 3 days to come to, fruition, and watched it trade the level once, reject, and now we're finally getting all of the things, right? So I picked this position up here for $8.25. I do have another spread on, which I'll talk about in a second in here, but these are just the directional calls that I picked up. So I bought these for $8.25. My stop loss was about $1, $7.25, give or take. Right now markets are closed, so there's obviously a wider spread in here of like 60 cents. The spread when I picked these up was about 10 cents wide. So give or take a nickel or two, I might lose 1,000, I might lose 1,100, I might lose 950. Somewhere in that general range is my risk. So I'm looking to risk $1,000 on this position. Now, my targets on this, now you'll see I've gone ahead and taken a couple contracts off here, technically 4 contracts off, right? Now, I'm risking $1 on this. My targets on this trade are actually going to come in up here towards 211.29s and then 216.28s. Now, I say that, and then it's like, okay, well, why were you taking, part of the position off? Can I get my thing back? Thank you. Why were you taking part of the position off up here at 13.25, 14.25, 15.25s? What were you thinking with that, right? Well, I'm risking $1 in this trade. I'm in at 8.25. I start taking my first exit at 13.25, which just so happened to be like right at this peak, right? It doesn't, there was no science, there was no level behind that, nothing like that. It was just a pure risk metric, right? I was up 5R on this trade, and R being risk. In this case, my risk was $1, and I was up $5 on this contract, and I said, okay, 5Rs is a good risk to reward on these trades. I can essentially be right 20% of the time on a 5R type trade and still be a profitable trader. So that's a good level for me to just go ahead and start taking off a little bit of this position. So that's all I did there with that, was just looking at my total risk and going, okay, I've got 5Rs in this trade. Let me go ahead and take a little bit of profit off, and I'll scale out half of my position on this, which initially I had another order up here at 16.25. We didn't trade it. That's fine. That's why I'm holding 6 instead of 5. And I'll look to manage that out. But I went ahead and got, okay, 5Rs, 6Rs, 7Rs on this trade to go ahead and start to layer myself out of this position. So right now, I guess that means I have an average out on these two at 14.75 and 13.25. You add that together, and my average exit right now is what, $14? 14.75, 13.25, average it out, $14. So I'm up about 6R on those first 4 contracts that I took out of this position with $1,000 risk. Now, you can still see, okay, I got an open P&L of $5,117 on this, and my P&L open on these is only $4,000, right? Well, at the same time, I also put on a spread. So again, my targets on this were up in towards $216.28. I think that's where we likely go this upcoming week here. So what I did is I put on a position here, the 212 half, 215 call spread. So I bought 25 of these, I sold 25 of these. And if you do the math on this, you break this down here, which we can do just for the sake of the video. So if I do 217.60, that's what I bought these for, and I subtract the $1.74 on these, it's going to show you, okay, I paid about 44 cents for this position, right? Now, if we multiply this out by 25, that's my total number of contracts. We times it by 100, and you'll see my total risk on this position was $1,090. I'm risking $1,000 on this trade as well. So in total, in Tesla, I have $2,000 worth of risk. going out into, the following week, which again, I think Friday might actually be, I think we might actually be closed Friday, Good Friday. At the time that I was putting this position on, I wasn't like necessarily thinking that. I was looking at a daily chart, giving myself the time, but now that I see 4 days till expiration, I'm kind of thinking Easter Sunday, all that stuff's coming up. Nonetheless, doesn't really matter. I gave myself plenty of time on this trade by stepping out the next week. I put on this risk, and the way in which I wanted to play this one is like, okay, I can put this one on if the directional trade stops me out, then I can leave this other portion on, and it's just kind of worry-free, right? I've already assumed the risk, and I've already said, okay, let it do its thing. But now that it's, I've got $1,000 worth of risk in it, I haven't had to look at it. I haven't had to do anything with it. And if we were to go ahead and close this out right now, you can see, okay, create closing order. This thing's trading for 87 cents. So I have 100% in this position right now, about $1,000 worth of gains, right? In this position, you go, again, $4,000 roughly in 4,020 in open P&L right here, 5,100 right here. So I got roughly $1,100, $1,093, if you will, $1,092.50 here worth of, gains into this spread right here. So now what my plan is to look to manage out of this 195 call, right, and still continue to hold these 212.5, 215 call spreads and see if I can get those closer to the $2.50 mark. Because if I can, and I can get Tesla over 215 by expiration, and they expire at $2.50, I've now bought them for 43 cents and sold them for $2.50. And that's like what? Basically like a 600% trade on 500% trade, whatever the number is, 5 times my risk on this position. Again, going back to that 5R, that's kind of my max on this position. Just so happens that the math works out from where I was getting in at to where I was looking to target on these. And right now they're trading a little under $1. I got $1.50 more to make on 25 contracts. So you do the math. It should be about a $5,000 potential profit on that trade. So there's another $4,000 left in this one here to potentially make, and all my risk and everything is still in alignment with this position. So I haven't done anything with that outside of just continue to hold it. Now, there was a lot in that. A lot of different, like, thinking through things and whatever else. I want to go to Friday's action though here, right? This was the write-up from Friday. This is the end of quarter Q1 wrap-up here. And what I wrote was an open above 197.01 that holds on pullbacks, and we have room into the 200.05 level. Again, we managed to hold 194.98 really well yesterday, and it looks like it's time for a nice move in here. Now, at 197.01s, right, in Tesla here, this is the new level that we need to get above, pull back and hold, and then from there, again, we're looking up through 200.05s and then more for that swing trade. And again, this is coming from a combination of the daily chart, which is down here in the bottom right, which was also a really nice gap over red, essentially, on Friday. It's a specific pattern here where you can see we get the gap over this red bar. And then also a combination of the weekly chart that I keep on my screen right over here for any chart that I'm analyzing. We had a weekly buy setup in there essentially 2 weeks ago now. So I'm continuing to play that weekly buy setup and the strength coming off the weekly chart, and I just want to get that daily chart and the hourly chart in alignment for me, which was, hey, get over 194.98s, find yourself an entry, which I did. I drilled down into the 15-minute chart in order to find that entry, and then look to manage the position off the higher time frame charts, which is the daily and the weekly chart. Now, again, here, 197.01s, room into 200.05s. I talked about 200.05s and the break of all this and why I thought today was it in the mentorship chat. And it has to do with the number of tests of this level previously and the fact that I thought it was going to break through that today. And again, today being Friday. Ultimately, ends up doing its thing. Pretty stress-free trade overall. Was down about $700 here at one point, obviously from my entry to the pullback, all of the things. But just overall, a really, really nice, clean trend here. And it took me all week. And that's the point that I wanted to get through with this video. Well, 2 points I want to get through with this video. Number one is having that plan, writing that plan out, and knowing exactly what it is you're looking for and looking to do. And then the second thing is having the patience in order to allow that to develop and then execute upon it when it comes about. So what I wrote in the mentorship chat the other week, and I've gotten a lot of messages on it for people, and I didn't tweet it, I didn't share it anywhere else, but the thing I want to share with you guys now is that the patience in which you have for your entries, how patient you are for that entry to develop, is how patient you should be on managing that trade out, right? So if you're waiting 1, 2, 3 days for that position, 4 days for that position to develop and find your entry, then you shouldn't be looking to get out of that position in 5, 10, 15, 20 minutes from now when you're looking at higher time frame charts and you're looking at these larger pictures and going, okay, here's where this has room to go. Let me sit back. Let me be patient with this trade. Took 3 days to develop, and I'm not even giving it 3 hours to potentially try and work, right? So that's the big thing. Put together the plan, have the patience, and then allow it to do its job, right? So having the levels, having all of these things definitely is a blessing. It's a big benefit. The levels, you can see just how accurate they are across the board many, many, many different times. So yeah, and that is one thing that I teach the levels, I teach the risk management, I teach the buy setups, all of those things in the options mentorship chat, and that's why I do spend as much time as I can with those people and sharing those things. But I felt that I had to share that little tidbit on the patience and execution side and management side just because of the messages in which they have sent me about how it ended up helping. So for example, one member ended up pulling off FedEx here this week, and the level was 228.94s to trade up into, and I think he picked up this position here on either Tuesday or Wednesday, I think Wednesday, and then held it all the way up here in towards the close on Friday, right? So hopefully that helps you guys, if nothing else. And at this point here, I think I'm going to go ahead and wrap up the video, 22-ish minutes, 23-ish minutes in here. If you enjoyed this content, please feel free to hit the like, hit the subscribe, thumbs up, comment, any and all of the things in which you can do beneath the video. I'll drop a couple links beneath as well to help you guys out with some different things, free trade plan sheet, the website, and all of that stuff. So anyways, thank you guys so much. Hope you enjoyed it, and I will see you guys on the next video. Peace.